Good afternoon, everybody, and today we're talking about the JP Morgan NASDAQ Equity Premium Income ETF. This is one that seeks to generate income through a combination of selling options and investing in U.S. large cap growth stocks via a monthly income stream. Okay, so monthly income stream from associated options, premiums, and stock dividends. Seeks to deliver a significant portion of the returns associated with the NASDAQ 100 index with less volatility, and constructs a long equity portfolio through a proprietary data science-driven investment approach designed to drive portfolio allocations while maximizing risk-adjusted expected returns. And so when we look at an ETF like this, as it mentions on here, the NASDAQ, we can actually look at the right here where it says NASDAQ 100 index. And what I did is I kind of looked at both charts for JEPQ and also this one for the NASDAQ index. And as you'll see, the NASDAQ index is up 19.74% over the last year. And this ETF is up over the last year 8.34%. So comparing these two, now year to date, JEPQ is up 18.54%, and the NASDAQ itself is up 31.98%. And so one of the main things you're going to see with these covered call ETFs is that they're going to underperform over the long run. However, I must say, looking at this so far, this is a relatively new ETF. I must say I'm actually pretty impressed with how this ETF has held up. Now, with that increased volatility with growth stocks, you're going to experience wider fluctuations in terms of the share price. I mean, you can see this one was down at $40 per share. Now it's at $48. But even so, it's not going to be as volatile as the NASDAQ. So even though you're participating in less upside, you are essentially still getting some of the upside, but you're also getting that passive income stream. That's the most important part, because this is all about cash flow. This is a cash flow dividend game. How much do we need to retire and never have to work a day in our life again if we don't want to? Now, there's a lot of factors and considerations, and this is not a one-size-fits-all solution by any means. You should always consult your financial advisor if you have one, and your own risk tolerance and investing goals. But as a hypothetical example, if you had $50,000 just to invest in this ETF, it's not going to be enough to retire, but I just want to illustrate how much potentially you can make from this ETF. $50,000 divided by, let's say, $48.21. Let's see here. So we're going to factor in how many shares we can buy, and then we'll factor in the most recent dividend. So 1,037 shares, and then the most recent dividend of 45 cents per share, we'll just say. And that's paid on a monthly basis, and you're looking at $466 in passive income just off that investment. Now, somebody commented in the last video I made it on JEPI about making $300 a month from this investment, which is not a lot. And fair enough, you're right. I mean, if you look at inflation, you look at different factors on how much it would take to actually retire from an ETF like this, you have a good point. But if you have $50,000 and you're willing to invest this for the long term, in terms of getting a passive income stream and building your portfolio, or if you have a diversified portfolio of other assets and you kind of want to figure out what to do with it and how to get regular cash flow from it, I mean, you're investing $50,000 to get $466 a month. May not sound like a lot, but it can add up over time. And if you're reinvesting these dividends, especially reinvesting, let's say, half of these or part of these, you can build that passive income stream even greater over time. So $5,600 a year could potentially become a lot more if you're reinvesting part or all of these dividends, depending on what stage you're in the retirement cycle, because there are going to be those who want to use these as dividends and just take the money out. Or you can just keep on reinvesting them and try to keep on growing your position size so that you can generate more passive income down the line. So the dividend right now, according to finviz.com, is 11.21%. But I must say, guys, with this ETF, I am very impressed with the performance so far. I think this is one to keep an eye on if you're looking at a covered call ETF. Now, what will be interesting to see happens is if the NASDAQ goes down significantly, what would happen to the share price then? I think that's, if we get a 30 to 50% correction down the line, if some big event happens where the market really does crater. I mean, we kind of saw that in 2022, but that's when this ETF came out, was September. So it doesn't really have a bias yet, but we'll see what happens. And with that being said, guys, thanks so much for watching, and we will see you in the next video. Take care.